Hi everybody and welcome back to my channel. Choosing a broker for trading can often feel like quite a complicated process. There are so many options out there and it is really easy to feel very overwhelmed, especially when you don't want to lose money and you certainly don't want to fall prey to a dreaded scam broker. That's why in this video I want to make that process easier for you by sharing some of the top points to consider when you are choosing a broker for trading. Recently I've been trading with the broker FXView, who are one of the world's leading brokers, offering the ability to trade many different financial markets. I'll talk a little bit more about FXView later in this video and why I believe they are one of the best brokers to consider for trading. If you want to check them out for yourselves, I have got a link below in the description where you can get some more information. Meanwhile, be sure to like and subscribe this video and let's dive into the main content. One of the first points that I want to talk about when choosing a broker to trade with is regulation. What is regulation? This is where a broker is regulated by a governing financial body, such as the FCA, the Financial Conduct Authority here in the UK. It can provide peace of mind that you place your money with a broker who is regulated, as generally they are monitored and controlled by a local regulatory authority to prevent any kind of fraudulent activities. You can usually find out on a broker's website if that broker is regulated and if so, who by. But it's important to check it out because there are some brokers out there, some overseas brokers that do not have regulation and do not consider it important. As you can see here on their homepage in the footer, FXView are regulated by the Cyprus Securities and Exchange Commission. And recently they've also gained regulation by the FSCA, as well as being registered with various regulators throughout Europe. Different brokers offer different leverage on their different trading accounts, and it's important to consider this when you are choosing a broker to make sure that you choose one that has the correct leverage to match your needs. But you may be watching this video wondering, what is leverage? Well, leverage is where you borrow capital from your broker to add to your funding capabilities. It enables you to purchase more of an asset, so it gives you more buying power. However, you may be more interested on focusing and managing your risk, and with that being said, you may decide that you don't actually want that much buying power. You may prefer to buy a smaller position size, and if this is the case, then having a higher leverage may not be as important to you. Whereas if your trading style demands that you have a larger position size, which is usually if you use a smaller stop, for example, if you are scalping, you may require a broker that has a larger leverage option. You may also find that trading brokers offer different amounts of leverage depending on which financial instrument you trade. So for example, they might offer more leverage if you trade Forex, but they might reduce that leverage for if you are trading commodities. For example, FXView offer 30 times leverage for their clients based here in the EU, which basically means you get 30 times buying power of your account size. So if you have a $1,000 account, you have $30,000 leverage. An exception is if you have a pro trader account and you are based in the EU, then you can receive up to 500 times leverage. And if you are based somewhere else, if you are an FXView global client, then you will automatically receive 500 times leverage on your account. Another important point to consider when you choose a broker is to check just what financial markets they have for you to trade. For example, if you want to trade indexes, there's no point going with a broker that don't offer the indexes that you want to trade. Some brokers may have a limited supply of financial instruments and markets for you to trade, whereas there are other brokers that have a wide range available, such as Forex, indices, stocks, commodities, and cryptocurrencies. So ultimately, make sure that the market you want to trade is available with the broker that you decide to go with. Another important point to check out when you are choosing your broker are the account options available. More often than not, brokers will provide more than one option for an account, and you've got to make sure that the account you choose is suitable for your needs. So usually you will find a broker will offer what is called a standard account, and generally speaking, this means that you will be able to trade, but the spreads that you have available will be a wider spread. You may be watching this and wondering what exactly a spread is. I have created a separate video that goes into more detail with some live examples, so I'll include a link to that above. But the very quick answer is the spread is the difference between the buy price and the sell price. So let's say that you buy an instrument for $10, then the sell price is $9. There's going to be a $1 spread, which means that once you've bought that, you will automatically be down $1. The idea of the spread in trading is you want it to be as close together as possible to reduce the drawdown that you are in when you are immediately into a trade. And that's why these accounts are very important with a broker, because usually the standard account will have a larger spread, but in return you generally don't pay commissions because the broker will take their cut from the difference in the spread. Whereas there will usually be another account option available with the broker that can have a different name. It could be called a raw spread account, and that is basically what it means. It means that you will have access to much tighter spreads, which make a more accurate way to trade, but in return you will have to pay for that choice, so you will usually have a commission to pay. FXView offer both the option of an ECN account, and they also offer an Islamic account to their global clients. But it's super important to check out the spreads as well as any fees that are there with different account options, which leads me onto my next point. Definitely check out the fees that are involved with a broker before you decide to sign up with them. So as I mentioned in my previous point, usually with your trading account, you will probably choose the account option that means you will have a commission to pay for a trade. Now this is usually working both ways, so you will usually pay a commission if you buy, and then you will pay another commission when you sell. But it's important to check that the commissions are not too high. That's one of the reasons that I like trading with FXView, because they offer very fair and minimal fees for trading. So they will charge simply $1 per lot per side. So if you trade one standard lot, and you buy, you will only pay $1 commission, and then you'll pay $1 again when you sell that position. FXView also have no hidden fees, and that's another crucial point to check out with a broker, is to make sure they don't have any hidden fees, because you might just find that a broker will have a hidden fee. They might charge you for making deposits or withdrawals. They might even have what's called an inactivity fee. So if you decide to take a break for trading, usually 6 months or more, they may charge you a monthly fee because you haven't been using your account. So it's important to just check there are no hidden fees before you sign up with a broker. Another important point to consider before you sign up with your broker is spreads. As I said before, the difference between the buy price and the sell price. This can be prioritized depending on your trading style, but generally the tighter the spreads are, the better it's going to be for you. Personally, I prefer the option of a raw spread account because it just means that the spreads are going to be a lot tighter together, even if you do pay commissions. When I first started out, I decided to go with a standard account because at the time I thought that not having commissions and fees to pay was a better idea. However, I soon learned that that actually detrimented my trading because it meant that if a price came too close to my stop, usually it means that the spread would mean that that would hit your stop and get you out of a trade, when if you had a raw spread account with spreads that were closer together, you might just be able to manage that drawdown before the market turns and takes you in your favour. So personally, I prefer to pay commissions and have a raw spread than have a free account but have a larger spread. But again, it's really important to check out the commissions involved and make sure that you are not paying too much. Although I mentioned about checking there weren't any fees involved with making any deposits or withdrawals, it's also good to check what options are available to make a deposit or a withdrawal from your trading account. A lot of brokers now, including FXView, are offering cryptocurrency as a method or even a main method for making deposits and withdrawals into their trading accounts, generally because it's easier for people worldwide and it can be a lot quicker as well. However, you may prefer a more traditional approach such as a bank transfer, credit or a debit card option, so it's always good to check out what there is available. This point can sometimes be overlooked, but it's actually one of the most important points to consider, and that is support. Super important to see what support is available from a broker because you don't know when you might just need that one day. Different brokers offer different methods of support such as online chat, email and telephone. It's also important to consider where their offices are based because, for example, if, like me, you are based here in the UK and you decide to go to the broker that, let's say, is based in Australia, let's say that you have a software issue, if you are in a trade and it freezes and you can't do anything, you need to ring someone and speak to somebody pretty quickly to get that issue sorted out. And if they're based in Australia, then it might not work out for you to contact Australia because obviously you've got your phone bill to consider and the time of day. So it's just really important to take into consideration accessibility and ease of contact when it comes to support. When it comes to trading itself, you also want to consider what software that you want to use for your trading. It's always good to check that the broker you are looking to sign up with has the software that you like to use. There's quite a lot of different types of software out there when it comes to trading. You might prefer MetaTrader, like me, there's MetaTrader 4, MetaTrader 5. There are also other programs such as CTrader, ActTrader, and a lot of brokers will have their own platform. So it's usually a desktop-based software, but it will be unique to them. Whatever it is you like to use for trading, it's always good to check the broker supplies that before you sign up with them. My final bonus point to consider before you sign up to a broker is to make sure that they have a demo account available. What is a demo account? Well, a demo account is basically a virtual trading account. It enables you to trade the live markets with fake money or paper money. So it's basically a simulated practice account, and it's so useful. It's definitely essential for complete beginners because it means that you can learn, practice and grow in a fake simulated environment that replicates the market but removes the risk. And even if you are a seasoned trader, a demo is still really important because it means that you can practice and try out any new strategies or amendments to existing strategies that you may have. Although a lot of brokers do tend to offer a free demo account, a lot of them will also have a limited time availability for this. So in the past, I have gone with brokers and found out that I only have 30 days to access their demo, which can be a little bit annoying because you might want more time than that. Again, it's why I like the broker FX View because from their dashboard, you can easily create a new demo account for free. You can download the software and you can trade that. And the only time it expires is if you don't use it for 30 days. And if it does expire, you can easily go onto your dashboard and recreate another one for free. So you always have access to a free demo account. So if you are looking for a broker to use to trade different financial markets, whether it's Forex, stocks, indices, commodities, or cryptocurrencies, I definitely recommend FXView as a broker to consider because they meet a lot of the points and requirements that I've shared with you in this video. I have created a separate video on FXView if you'd like some more information about them, and I have got a link to them in the description below. Also, it's really important to note that FXView do offer a 100% deposit bonus, meaning that when you deposit funds with them, they will provide a 100% credit to your account, which basically gives you extra buying power. Well, just for you guys watching this video today, they've actually increased that to a 200% deposit bonus for a 30-day promo. So if you want to take advantage of that offer, make sure that you sign up using the link below. Meanwhile, if you've enjoyed this video, if it has given you some value and helped you out, then please help me out in return by hitting that like button. And don't forget to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.